I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It's Wednesday, March 16th. A lot of news and a lot of markets flying around here today. We've got four markets that we're going to touch on: corn, wheat, live cattle, and finish things off with the feeder cattle market. To kick things off, we're going to pick up where we left off in yesterday's Tech Talk, and that was May corn. We talked about the bearish seasonal that started Sunday evening and the technicals surrounding that seasonal trend. A trend line resistance held again today, and now we're breaking and close below that trend line support, taking us back towards the low end of the recent range, near that 728 to 730 area. For the bulls left in this market, this is a must-hold line in the sand. The trend is still up, but a break and close below this pocket could accelerate the selling via long liquidation from the funds who have a pretty hefty net long position. And if we were to break and close below here, we'd look for a retracement of this breakout point, which comes in a little bit closer towards that psychologically and technically significant $7 handle. So that's what we're looking at for the corn market. And moving over to the wheat market, there's not really a whole lot to say with a whole lot of conviction, other than point out the obvious that this market has been wild, and today really, lived to that hype. We had some headlines early on that Russia and Ukraine drew up a neutrality plan to end the war. That sent futures limit down, which is 85 cents. Because we finished lock limit down, we have expanded limits tonight and tomorrow for both Chicago and May wheat. That is $1.30 daily trading limits. And it's going to be really interesting to see if wheat continues lower, because now the headline risk has shifted. The headline risk was, de-escalation. That's the risk. So the risk is to the downside if we get news of de-escalation. But now that we have some rumors and headlines of de-escalation, what if that's all just a bunch of hot air? Well, then the risk becomes escalation. So we might see a little bit of follow through, but I think ultimately the markets will shift back towards the what ifs of escalation. Obviously, that's going to play a lot in the price action in corn as well. I think corn was sharply lower today in tandem with the wheat market. If wheat's able to stabilize eventually, that'll probably help corn, but technicals are probably playing a little bit more of a key role in the corn market as well. The other thing I wanted to note in this wheat market was just the lack of volume. We've got the volume bars pulled up here. Yesterday we traded in about a 72-cent range on about 28,000 contracts. We were trading more volume on days that we were lock limit up all day. So the lack of liquidity has really kind of amplified some of these intraday swings. So we're still kind of erring on the side of caution for clients, saying if you don't need to trade wheat, then don't. There's other opportunities out there: corn, soybeans, as well as several other commodities that we focus on as well. So that's kind of what we're looking at for the grain markets. Moving over to the livestock side of things, April live cattle we touched on yesterday as well. There's a bullish seasonal trend for the December contract, and this week's price action has so far been friendly, but today was a big disappointment. We saw the stock market rally on the news that there might be peace between Russia and Ukraine, but cattle actually sold off on that, which goes kind of against the grain as to what you would think. So the fact that we had a reason to stabilize at the very least, and we actually sold off, is a bit of a caution flag for us here. This 140 area was a line in the sand. This was previous resistance, now becomes support. We broke below that support, so again, that kind of neutralizes some of our friendly bias here in the near term. The bulls need to get back out above this 140 and a quarter area, and even more so important, get out above the 100-day moving average, which comes in a little bit closer towards 142. If they can do that, we've got a gap up here to fill near 144, 144 and a half. But again, today's price action was not all that encouraging. The bulls need to get something going here before the end of the week to feel a little bit more comfortable with going into next week's trade. And wrapping things up with the feeder cattle market, the same can be said. We saw corn futures sharply lower. Oftentimes this is a bit of a tailwind to the feeder cattle complex, but we didn't see that today. We got our head poked out above some resistance, which we tested yesterday, but weren't able to get any follow through. And again, as with the live cattle, we had reason to rally. Corn market sharply lower. Feeders should have been able to get something going, but failed and stalled out. So again, a little bit of a caution flag here in the very near term. We're optimistic, but concerned with today's price action. So kind of waiting for the dust to settle there. Hopefully we can see a little bit better price action going into the back half of the week. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Sloup with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss.